Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Spencer Cole, who's the Chief Investment Officer for Vox Royalty. Vox Royalty are a mining royalty company with a portfolio of 60 royalties and streams spanning 5 jurisdictions. Since the beginning of 2020, Vox has announced 25 separate transactions to acquire 50 royalties. In the past 6 months alone, Vox has dual listed on the Nasdaq exchange, launched a maiden dividend, and announced plus 160% annual revenue growth. So that's pretty good. Spencer co-founded Mineral Royalties Online, which was a specialist marketplace brokerage for mineral royalties, underpinned by development of the world's largest property royalty database, which was subsequently sold to Silverstream in 2019. YMRO, Spencer was involved in over $1 billion royalty transactions. In addition to co-founding MRO, Spencer spent over 10 years at BHP, South 32, and UBS Investment Bank in a wide range of commercial and technical mining roles. Spencer holds a master's in engineering, mine engineer from the Queen's University in Kingston, Ontario, and has a Bachelor of Commerce from the University of Melbourne. And he's here today to give us an update on Vox Royalty, and I suppose talk more things around within the sort of royalty space. So after all that, after me talking, I'd like to welcome Spencer to the podcast. How you doing, Spencer?
I'm well, thanks, Rob. How are you doing?
I'm good, thank you. As I mentioned just before we came on there, it's my full podcast recording of the day, so we saved the best to last. So
I'll try and keep it painless.
No, that's fine. As we obviously, as we always start these podcasts off, and you're an actually avid listener, so you know how this goes. I wanted you to just tell us obviously a little bit about your career. Obviously, I highlighted a little bit there, but if you can just tell us a little bit about your career, and then we can go into some more questions.
Absolutely, Rob, and pleasure being here today. Thanks for taking the time. So as you can probably tell from my unfortunate accent, I hail from Australia. As you mentioned, I'm an Australian mining engineer and reformed investment banker. My original backstory in mining. My great grandfather actually had his own small gold mine in north of Melbourne, but my grandmother tells me it was more of an excuse to get away from his wife at the time, and she said it wasn't the most productive gold mine in Victoria. So I think that was more of a hobby mine than a real commercial mine. Yeah, so there's a bit of mining in the blood from day dot. But my entry into the mining sector was back with UBS, and I then got headhunted to move across to BHP and worked across a range of different roles at BHP, and then subsequently went on to work with South 32. But as it relates to royalties, when I was at BHP, I just kept coming across all these forgotten royalties, and that really planted the seeds of what would blossom into a fully fledged career in the mining royalty space. But yeah, why I'm in Toronto today, I wish I could say it was some sort of strategic career choice or reason, but it was actually matters of the heart, Rob. I was chasing another female mining engineer across the planet, and we'd been dating long distance from Boddington, Western Australia to Toronto, and that was obviously mission impossible. And so I decided to take the plunge and moved to Toronto about 5 years ago. And unfortunately, that relationship didn't stick, but Toronto stuck. So excited to be still living in Toronto as an Aussie mining executive.
Yeah, no worries. And and obviously living in Toronto or even just in Canada, what would you say the main differences are within the mining industry? And I know that's probably a bit of a broad question, but is there any sort of major differences you would say if you were doing the same a similar role in Australia than you're currently doing in Canada?
Yeah, it's an interesting one, Rob. I've had the good fortune to work across Australia, in the US, in Africa, and now in Canada. I'd say the perception around mining is very different. If you're in a pub in Western Australia, in Perth particularly, and you say you work in the mining industry, people are like, oh, they start asking you more specific questions on who do you work for, what do you do. When you walk into a pub in Toronto and you say, I work in the mining industry, they say, is that crypto mining? Is that, what coin are you trying to fleece investors for these days? So I'd say the general understanding and appreciation for mining is somewhat limited here in Toronto, despite the fact that there's over 1,000 mining companies headquartered here. So I think there's less understanding for it. In terms of the actual industry and the companies, there's a lot of similarities between the juniors in West Perth and the juniors here in Bay Street, Toronto. There's probably a slight, bias in terms of which geographies they'll allocate capital to. I'd say, the ASX continues to support African mining projects a little bit better, in my opinion, whereas, the Toronto Stock Exchange and TSX Venture, I think they support South American mining projects a little bit more consistently. So, there are some of those types of nuances, but all in all, it's a pretty fun place to live, Toronto, particularly as a mining executive.
Yeah, I was there a few weeks ago at PDAC, so and been there a few times, so I know what you mean. Wondering if you can give us an overview of Vox Royalty. Vox Royalty.
Sure.
Sorry.
So Vox is a global royalty investment company. We've been around for the better part of the last 10 years, but only publicly traded for about the last 3 years. So we went public on the TSX Venture back in May of 2020, which was an interesting time to take a company public in the depths of COVID. Most investors were saying, oh, this COVID thing probably wash over in a month or two. But so we went public in the start of COVID, and then just in the last 6 months, we dual listed on NASDAQ. So our business model, Rob, is we're buying royalty contracts. So contracts that typically give us between 1% of revenue to 3% of revenue from a mine. And we buy those across 20 different metals, with a heavy bias towards Australian mining royalties. And then we sort of invest in those royalty contracts, and then as they start producing, we generate more and more free cash flow for our investors. I guess the nuance with our business model is we're not operating mines, we're not financing mines themselves. We're typically finding these royalty contracts that are sitting in the hands of prospectors and junior explorers who've historically sold mining projects and kept a contract that gives them a future royalty stream. So we're typically funding the retirement of prospectors, not funding new mine developments per se.
You mentioned obviously you listed back in 2020, and obviously a lot of things have happened during the last few years. Looking back, do you think that was the right time when you listed, or do you think you might have been better to list more recently?
Yeah, it's an interesting question. The benefit of hindsight is always a bit of a double-edged sword. But I think for us, from a Vox perspective, the company was created back in 2014. Or the concept was even earlier than that. And we've had some very supportive, loyal, patient private investors. The whole company was only founded with $7.5 million from one family office in the United States. and we're now a $180 million company. So I think in 2020, our access to finance as a private company, we could see what that growth trajectory looked like, and accessing public equity, we thought that would really turbocharge the growth of the business, and that certainly played out. When we went public, we had 37 royalties. We now have 62 royalties. So being a listed company has been hugely helpful from a growth perspective. Whereas I think had we stayed private for longer, maybe that growth wouldn't have been as sort of exponential. But the flip side is valuations might have changed over 3 years had we gone public later. Who knows? It's a tough question, really.
Why don't you just walk us through the background on creating the world's largest royalty database, and obviously eventually selling the royalty startup to Vox Royalty?
Absolutely, Rob. So I co-founded a business called Mineral Royalties Online, and the cornerstone of that business was the world's largest proprietary database of third-party mining royalties. Look, the seed of that was really planted at BHP. Myself and one of my BHP colleagues, Riaan Esterhuizen, who's a South African Australian exploration geologist, we both just kept finding forgotten royalty contracts at BHP. Together, we found over 100 separate royalties. And in some cases, they'd just been put in the bottom drawer and forgotten through no fault of the organization necessarily, but with turnover across the business, these are essentially just paper contracts, and they can easily be lost. On one of those royalties alone, we found over $14 million in back royalty revenue that was owed to BHP, and managed to recoup that. So seeing all these royalties forgotten at the world's largest mining company at BHP, we asked ourselves the question, well, how many other folks globally have forgotten about their royalties? And so after we left BHP, Riaan and I started building from first principles this database of identifying mining royalty contracts all around the globe. So we went through tens of thousands of public filings, but importantly, a lot of the hidden gems, so to speak, were in sort of non-public filings and private exploration data sets that we were able to get access to from individuals, companies, and sort of mining departments. But what we found consistently, Rob, was that there's just this huge volume of data within the mining industry that isn't being properly processed and sort of, I guess, interrogated for value. And this isn't unique to the mining royalty industry, but this is representative, I think, of part of the opportunity we have in the mining industry is going back through historical data sets, in some cases paper data sets in dusty warehouses, similar to what we did with this royalty database, to find the benefit and insight from billions of dollars of historical exploration and development spend. So we grew that database into what is now almost 9,000 separate royalties. And we sold that database and effectively the IP to Vox in 2019, 2020. And that's really, I guess, been part of the secret sauce that allows us as Vox to find forgotten royalties and bring them into our portfolio at great value.
Yeah. Out of, obviously, you mentioned all those royalties, is there any that stand out that you think is a hidden gem, or has maybe even further developed? Obviously, can only give so much information away, but just wondering if you could just elaborate on anything that was obviously significant.
Look, some of our most sort of fun or exciting deals, Rob, are where we find royalties that other people are completely forgotten about. So I'll give you a couple of examples. There's a hearing aid technology company in Western Australia, and we approached them and we said, hey, you guys own a gold royalty. And they said, no. We're the hearing aid technology company. We don't own mining assets. And we said, no, well, in our royalty database, we can see that the ASX shell that you inherited still owns a gold royalty. And so for them, this is sort of free money. And I think they literally said to us, well, this is great. It's one thing for people to come out of the woodwork and tell you you've got liabilities in the shell company, but for someone to come out of the woodwork and say you've actually got an asset, in that shell is a real gift. So, that royalty is called Mount Ida. We bought that about in early 2020, and that is expected to come into production in the next quarter. That mill's being fully constructed as we speak. And so that's a sort of a near-term growth asset. So, but things like that, or, we bought a producing iron ore royalty that Mineral Resources operates from a telecommunications company. Those are really fun deals because it's a win for the counterparty, because the seller, because, it's free money for them and they can reinvest it back into their core non-mining business. And for us, we get access to these really interesting royalties that are moving into production, and and we're able to uniquely identify and transact on those types of royalties. So those are the types of ones that get us particularly excited, and where we think we'll be able to make pretty attractive returns over the medium and long term.
The concept of big data is obviously still emerging within the mining industry. How have you seen this starting to change in more recent times?
Yeah, so I think a number of the individuals and executives that you interview, Rob, have touched on this. Even my esteemed colleague and friend Darren Stralo from Bellevue Gold, he touched on creating the mine of the future. And I think as an industry that is highly capital intensive, there is just a mountain of data that's being created every year. Across every aspect of the mining ecosystem, whether you're a grassroots explorer, a developer taking a project through study phases or into construction and production, everything we touch within mining is creating sort of a data fingerprint. And as an industry, we've been really terrible at valuing that data. And so, even when I was at BHP in South 32, some of the emerging trends we were looking at was, long term, what does a mining company actually create value doing? It's holding the mineral title and actually, extracting and selling the minerals. But everything in between owning the mining tenements and actually extracting the commodity, there are other groups that are value adding, and other groups that probably place more value on that data. So I'll give you an example. There's a lot of OEMs that are moving from just selling trucks or selling shovels or selling longwalls to, actually pivoting to a services model. Because if you're GE or Rolls-Royce, you ascribe more value to the operating data from that machine. So instead of like GE selling, jet engines, they're selling, thrust hours. So you as the airplane company, you don't actually own the engine. You are paying on a dollars per thrust hour basis, or like a Sandvik, selling on a, units of lateral development basis for a coal longwall. If the mining company doesn't value the operating data from their machines or the data from their historical exploration, logically, a technology company or an OEM is willing to pay more for that data. And so, long term, it probably means that the mining companies and the mining industry, we shouldn't actually own the data if we don't place value on it. So we exploit that from a royalty perspective, where there's all these data sets, terabytes worth of data globally, and we interrogate that, process it, and look for forgotten royalties that we can bring into our portfolio at great value. But I think that trend of mispricing or misunderstanding the value of operating data within the mining industry will continue to play out. And I think it's going to reshape how the mining industry of the future.
In your obviously regular dealings with royalty sellers, what are the sort of common mistakes do you see explorers or prospectors make when they write royalty contracts?
Yeah, so this is a key point. I mean, that a lot of prospectors or junior explorers, they might only ever see one royalty contract in their whole lives, Rob. They might sell one tenement or sell one mine. And so, anytime you've only practiced one skill once in your life, you're not going to be, you're not going to be particularly good at it, obviously. So if you're only ever writing one royalty contract in your career, or touching one royalty contract, it's understandable you won't know what best practice is. We work with a lot of prospectors and explorers to share templates and I guess to give them tips and tricks on specific clauses that fundamentally change the value of their royalty. There's some common ones that around the caps on royalty revenue, or if there's a hurdle rate that the royalty only kicks in beyond the reserve base or something like that, or if there's any restrictions that mean that you can't readily sell the royalty, that's obviously going to severely impact the value of the royalty. Or even something as simple, one thing we commonly see is if the royalty contract doesn't explicitly say you can register the royalty on the title, so on the tenement or the mining claim, then if the operator goes through administration, there's a risk the royalty could be zeroed out. So, one extra clause around registering the royalty on the tenement could be the difference between that prospector or explorer's royalty being worth 10 million or zero. So there's a whole host of, the devil is in the detail when it comes to structuring royalty contracts. And we routinely try and, work with prospectors to get them cleaned up and in good sort of shape.
Why hasn't the mining royalty industry been more sort of active within Australia over the past 20 years compared to North America?
Yeah, we get this question a lot, Rob, because our growth focus really is on Australia and Western Australia particularly. So about 42 of our 62 royalties are in Australia, and the majority of those are in Western Australia. I think there's a lack of understanding around mining royalties in Australia, despite how big the mining industry is. So I think you haven't had any local champions in North America. Franco-Nevada, which really the grandfather of the royalty industry, they made their first royalty investment back in 1986. And then since they went public in 2007, there's been a lot of investors in the North American mining industry who've made a huge amount of money in investing in royalty companies. The same doesn't exist in Australia. So, the superannuation funds, the institutional investors haven't made money in royalty names in Australia typically. Unless they've, invested in North American royalty names. So I think, when people make money in something, they tell their friends, it becomes, rapidly becomes better understood. In Australia, we just haven't had any local royalty champions for people to make money in. And I think that's led to, a lack of interest and understanding in the sector. So I think until we have, a really active, acquisitive, royalty company and champion to demonstrate the option value that you get from a royalty, I think the institutional understanding and knowledge in Australia will be quite limited. And Australian mining operators are notoriously negative when it comes to creating new royalties. They just see it as a drag on cash flow, whereas it's a much more common financing mechanism in North America. So I think companies like Deterra have a real opportunity to change that institutional knowledge around royalties in Australia. But there's certainly a long way to go to try and educate the Australian market around the value of royalties.
And what about the royalty industry in other jurisdictions or even other continents, whether you look at Africa, South America, looking for royalty companies out of, say, the UK, out of London?
Yeah, look, it still is very much a North American centric business and industry, Rob. If you look at, it's about 30 or now about 25 listed royalty companies. I think about 20 of those are listed on North American equity markets. So it's a $65 billion industry in terms of market cap, but I think it'd probably be about 60 billion of that is headquartered in North America. In terms of the actual royalty assets themselves, most royalties are created when companies or individuals sell mining claims. And by virtue of the consistency of projects turning over hands, there's more gold royalties than any other commodity. And there's more gold royalties in North America and Australia because mining claims is typically turn over more consistently in those jurisdictions. So, within our database of almost 9,000 royalties, there's a lot of royalties in Africa and Latin America, but prospectors and explorers are just much more familiar with creating royalties in North America and Australia. So that's where the majority of the assets continue to exist. So, and also, like in some countries, in certain parts of West Africa, for example, or, certain parts of Latin America, it's different. You can't register the royalty on the government title. So that also impacts the ability for prospectors to create new royalties if the government doesn't recognize them as sort of an interest in land or as a mortgage.
You mentioned obviously royalties are mainly on sort of gold assets. Is there any other commodities that you see there's going to be more royalties on?
Yeah, so across our 62 royalties, we've got exposure to 20 different metals. So, we're right across the commodity spectrum from precious metals to base to battery metals and some iron ore as well. There are the majority of royalties in existence are sort of gold and precious metals royalties, but there is a growing trend, particularly across base and battery metals, to create new royalties, either prospectors creating them as when they sell projects or also as a form of project finance. We've recently seen obviously an explosion from a lithium perspective, and so there's been a lot of new lithium royalties being created to fund new lithium mines. So it's the instrument works across any type of commodity. I think the only challenge is for some of these more specialty metals, where you're not selling into the London Metals Exchange. You just need to be careful with how you're calculating revenue and making sure that there's no games that can be played selling to an intermediate sort of subsidiary or when it's not an exchange traded commodity. But we would expect that the volume of non-gold royalties will continue to grow.
How should junior explorers and miners be thinking about using royalties to sort of fund their projects?
So, look, I think particularly in markets that aren't that familiar with royalties, such as Australia, if I was a junior explorer or developer, executive, I'd be looking at what's the full suite of funding options for me. And if you're pre-revenue, if you're years away from production still, obviously you can't look at debt. From an equity perspective, if your share price is trading around 52-week lows, you probably don't want to dilute shareholders currently, which is fair enough. So, I would encourage some of those junior companies that are struggling to make the numbers work on equity finance to consider, creative financing like selling a new royalty. Because yes, it creates sort of a future sort of liability against cash flow, but if that saves you having to sell, some non-core projects, or a bunch of actual mining tenements, if you can sell a new royalty and that gives you 12 or 24 months worth of runway to weather these current equity market conditions, I think that's probably, a much better outcome than doing a highly dilutive equity financing, or having to sell, a bunch of tenements. So, for any junior explorers or developers, I'd strongly encourage them to think about creative, ways to use royalties to extend their cash flow runway.
What are you most excited about for Vox Royalty this year?
Yeah, so the last 12 months has been a really sort of transformational period for the company. Last year we increased revenue, as you mentioned, by over 160%. And, being able to ring the bell in Times Square on a NASDAQ listing was sort of a once in a career moment. It was a little bit awkward as to clapping for a full minute and then staring at different cameras. I don't think I'm really made for that type of on-camera experience. But milestones like that were incredible in the company's growth. And in the last 2 years, we've gone from 1 producing asset to 6 producing royalty assets, and that's set to continue. I guess what really gets me excited about the next 12 months for Vox, one is continuing to watch the organic growth in our royalty portfolio. So going from 6 producing royalty assets to 8 to 10 and 12 over the coming quarters and years, and which is validation of our ability to pick the right royalty projects. So that organic growth within our portfolio of 62 royalties really excites me. And then the other thing that really excites me is continuing to find really interesting mining properties that have royalties on them and bringing those into our portfolio. So growing our portfolio, I'd like to grow our portfolio to over 100 royalties, within the next 2 to 3 years. And, being able to look at any mining property globally, any commodity, and working with a really sort of eclectic group of royalty sellers from prospectors up to large cap miners, and everyone in between. There's so many interesting deals that we're working on right now that I think will add value both for the seller and for us and our Vox shareholders. So that gets me really excited, Rob.
Yeah. Obviously, the podcast, the audience is mainly people within the mining industry. Obviously, we've got mining professionals. We have service providers listening to these podcasts. Also, we have obviously investors listening as well. As a final comments and closing comments, is there anything you would like to add in our obviously discussion?
Yeah, absolutely, Rob. Look, I'm extremely passionate about the mining industry, and not just from a royalty perspective, but just generally. I could, my 6 siblings would tell you if they were on the line that I'd talk the leg off a chair when it comes to mining. So, always excited to connect with other people within the mining industry. I guess my parting words would be, whether you're an investor looking to get exposure to a royalty company, feel free to reach out. If you're a prospector or explorer who's looking to structure or sell a royalty, or if you just want advice on what best practice royalty contracts look like, likewise, feel free to reach out. Or, if you're someone who's in the mining industry and looking to change career paths, I've done a range of roles from sort of commercial roles into operational production roles into some engineering based roles and everything in between. So if you're looking to pivot within the mining industry and you're looking to ask a few questions, likewise reach out for career sort of chats as well. So that's one of the things I love about your podcast, Rob, is you touch so many different segments within the mining industry, whether it's careers, investing or project development or technology or everything in between. So I would just strongly leave listeners with the thought that I'd love to speak to anyone who's equally passionate about the mining industry about any of those various topics. So feel free to drop me an email.
Yeah, no, that's great. And Spencer, really appreciate your time and obviously give us an update on Vox Royalty and obviously educating our audience around the royalty space. And there could be obviously a lot of junior miners, prospectors out there that may be looking to move into that royalty space and wouldn't know how to structure something. So obviously there's some advice there, and obviously they can then reach out to you for obviously further information and further advice. How can our audience reach out to you? And also, what social media platforms are you on and Vox Royalty on?
Yep. So the Vox Royalty website is just www.voxroyalty.com. So all of our corporate information, corporate deck and like are on there. We are on LinkedIn and Twitter predominantly. So check us out on LinkedIn or Twitter. Personally, you can drop me an email at spencer@voxroyalty.com, or hit me up on LinkedIn or Twitter. Likewise, but email is probably the best way if you want to get in direct contact with me, or if you want to get more information on the company, just go to the company website.
Yeah, certainly. We include those in the show notes, accompanying this podcast anyway, for easy access. So really appreciate your time, Spencer. Perhaps you want to come on later in the year or even next year to give us an update. That'd be great. Sounds
great, Rob, and thanks so much for the opportunity to come on the pod.
Yeah, no worries. Obviously, you're an active listener, so it's great to have some of our listeners come onto the podcast. I suppose what I'm looking to do with this podcast is to make it very educational. So anyone that's listening that has a certain specialisation within the mining industry, happy for you to contact me, like Spencer has, to come on and share your story with us and with our mining community, but global mining community and audience. So really appreciate your time for listening. Appreciate your continued support. Please keep sharing these episodes amongst obviously mining professionals within the industry, people that you know, but also people outside of the mining industry. And for instance, with this particular episode, understanding that you can potentially invest in a company like Vox Royalty that have a number of investments in other assets. So you're not necessarily investing in one particular asset or mine, you're actually spread across a number of different companies, for instance. So please share this episode with others in the mining industry and outside as well. And please keep sharing this podcast. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.